Hey traders, Greg here. So, big news. We all know yesterday what happened. Markets took a dive, and this, in part, was the heads-up culprit. We talked about this in the advisory letter when this failed to continue to go lower. And when it started to creep up, it really didn't make too much sense because, this violated the trend. It broke through major support. It was headed down, had this gap up reversal day, and this down, and didn't follow through, and it went up. And so we talked about different markets that were not doing well. One second here. We had the transports were starting to go down, and interest rates going up. Not a good sign. And when you see this falling and this going up, it should be like a loudspeaker going off that says something is wrong. However, when you see this going up and you see the transports going up, that's when making the argument of interest rates going up are related to an expansion of the economy. Not the opposite way around. There was a commentator on CNBC saying, interest rates going up, it's really not a big deal. It's not a concern because it's he was pretty adamant, it relates to, an expanding GDP. But no, this is why you need to know into market analysis. If it was an expanding GDP and an increasing economy, this would not be going down. In addition, this would not be plummeting, right? Materials, industrial metals. So a little short intro into understanding into market analysis. Yes, interest rates go up when there's demand for money. They also go up when there's a belief that there's increasing inflation. But when there's a demand for money because the economy is expanding, people are borrowing money to, put an extension on their house, buy computers, expand their business, so on and so forth, the transports go up. The Dow goes up. Materials go up because the cost of materials are going up. So with all of those positives that are happening, earnings will go up. So while, we are not fundamentalists here, earnings, move the market. How much money is a company making? So, again, repeating, when we see, these intermarket relationships not in alignment with each other, it's a problem. And then you add to that financials starting to break down, other big banks starting to break down. All of that is bad news. Energy breaking down, right? Bad news. Right, now we got consumer staples moving lower. Technology finally giving it up. All of this is, a heads up to, not a heads up. I mean, it's obvious now. There's problems, and you need to protect your capital. There'll be some shorts and call spreads, of course, and leaders like ServiceNow software, which has done tremendously well. Stocks like this are going to come down, right? And look, if the market gets into a bear market type of situation, it's too early to know yet. We may see this, moving down a considerable amount where it's going to be a buy, and there'll be lots of that. The breakdown in semiconductors that were beginning to bottom. And so while this may turn back up again, we don't know. You look at the weekly chart, if that breaks this support, it may be headed down here. We look at SMH, a similar pattern. So as we look around the markets and look for insights as to, what's happening, what's doing well, what's doing poorly, and then we start looking for what's showing relative strength and what's showing relative weakness, and we can start to look at other ETFs and see, what's done well over the course of a day, a week, a month, a quarter, of the year. As long as we sort this by weekly, and We don't want to see interest rates, the best thing, producing percentage gains on the month when transports are diving. I can't make that point any more clear for something to take into the future and use it to your advantage. Cybersecurity has done tremendously well. It's going to come down. It's just breaking major support now. Looks like it's got to go lower, and there's going to be many opportunities into next year. And of course, we'll be searching for those and looking how far this correction goes. We'll look at our market internals, which sentiment, I covered that pre-market. Sentiment is still at a bearish extreme. Breadth is nearing a bullish extreme, but breadth, well, why is breadth going down? Well, pluses and minuses. When breadth gets to the extreme that it is, okay, fine. But, this will probably not go down a whole lot more while, the S&Ps, which were decimated yesterday, slicing through major support, cutting through the next support, give or take, closing below the 50 MA, an unfilled gap below. Odds are this is going lower. Is Santa coming to save the day and reverse this? Well, I wouldn't totally put it out of the question. I think it's highly unlikely, but this looks more probability that it's coming down there, as well as the NASDAQ 100, and looking at the Magnificent 7, which is what dragged the Qs up to new all-time high. Also had a nasty day yesterday. So, there you have it, and so the markets today are just catching their breath. You can see here, they're down at the bottom of the range and unable to lift off at the moment. It's down here this low, so maybe tomorrow they get a little bit of a rebound, or this 1, 2, 3 triggers and it's on its way lower. But, right at this time, we're sitting in the green room like there's just nothing moving here right now. And if we look at this on a 5-minute chart, as you can see, it's just flatlining there. So no one's really interested until more data becomes available, right, building this chart. And so if it can get above here, which may happen tomorrow, we'll see, we may have a little rally. However, when you get a base like this, a 1, 2, 3, which this is the essence of a 1, 2, 3, a big nasty bar down, an inside bar, which builds a base, and then it triggers, and then it goes lower. And of course you say, well, lower to where? And then we could go and look at the 65-minute to look at our intraday time frame, and well, there's a more significant support down here. This little shelf where it's holding for the moment isn't much of anything, and it's just hanging there. So if it breaks, it just looks like it's going to have to go lower. One of the things we could look at, I don't have time today, well, maybe I do. Let me just take a quick peek here. Looking at tomorrow and looking at, well, what's the biggest volume strike? And what's on the Qs? That's not going to be all that helpful. It could somewhat, Biggest volume strike today is 515. And you can see that's about where it's holding, give or take. That usually can give you a guide as to a target. Look at what the biggest volume strike on the day is. And if we look at, the S&Ps, 5850, and you can see it's just holding above here. So if it was to hit there, it would probably spring back up. It could provide a whipsaw. Now, if we were to get that kind of a whipsaw on the 5-minute chart where it spiked down and it came right back up again, that would be a clear indication for, at least on a short-term basis, for a scalping long trade where we would have a little breakdown failure and a move into the void. So we'll see what the rest of the day brings, and into tomorrow. As always, if you have questions, email us, Greg and Dan at Master Trader.